Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in today's video I want to talk about one high growth company we have not spoken about for a while. So that's the plan, and I don't want to make the video any longer than it needs to be, so I'm going to go over what they do. I'm going to talk about their financials. We're going to compare it with their peers and other companies in similar sort of industry, and then at the end we're going to do a quick valuation and to see if this company is a buy right now. But of course we're gonna, as always, this is for entertainment kind of purposes, so if you are interested in this company, you will have to do your own research. As I can't even talk. Like I've always said, it takes a lot of time to prepare these videos to get, to put them together and share it with you guys. So I would really genuinely appreciate if you can join us on the Patreon account, if you can join us on the Discord, if you can join, just to get access to all of these things, as well as of course liking the video, subscribing to the channel. Right now we like 50% of you guys that watch the videos regularly are not subscribed to the channel. I don't know why, but the other half, thank you so much. I appreciate that. And if you haven't done it already, it's not too late. You can do it now, and I genuinely appreciate that. Anyway, let's get to the video. Right, the company that we're talking about is ServiceNow. This is this is very similar to Salesforce. Okay, basically they deal with the enterprise cloud computing solutions, the structures, they manage it, automation services, enterprise worldwide. The company operates a platform called the Now platform for workflow automation, artificial intelligence, machine learning, robotic process automation, process mining, performance analytics, and so on. So it's a software company that's doing all the things that other the Salesforce is doing, from AI to managing platforms, in terms of cloud side of things, in terms of security side of things, in terms of or that automation and so on. So currently, in terms of for 1 year, is 76% up for the 1 year. The highest, so right now it's closer to these 70, basically the 52-week range. 52-week range was 734. Right now it's 729. Let's look at the financials. We're looking at in terms of revenue side of things. So you can see in the millions in 2013, 400 million to right now 8.4 million. This is one of the reasons why this company has been expensive for a while now. And if I show you the graph there, you can see how beautiful this looks. Okay, from 2013 to right now where we are in 2022. In terms of net income, however, it's been basically losing a lot of money and then in 2019 they started, basically the net income starts growing, which is quite nice, and right now it's sitting the highest it's ever been, which is 1.5 billion dollars right now. Now let's go on here. So 149 billion market cap. Of course, they don't have any dividends, which is absolutely fine. Earnings per share has been growing massively from 2015 to right now. So in 2013, 2014, they were losing money. 2015 is when they became profitable. And then since then, they've been actually doing really well. Free cash flow per share has also been going up around that time. Shares outstanding has been going up too, because this is one of those companies that are still growing. So they are diluting our shares so they can actually use that money to reinvest in the business, and they're still in that growth mindset. And as you've seen this already, in terms of sales, in terms of revenue, it has been growing from almost zero to right now $8.4 billion. Return on equity, right now we're looking at about 27%, which is absolutely fine. Return on invested capital, we're looking at about 7%. Operating margins of 8%. Free cash flow margin of 28%. And net debt to EBITDA is almost non-existent. Okay, so this company has absolutely no issues when it comes to that debt level and so on. So now looking at the earnings side of things, we're going back to Seeking Alpha, go to estimates, and this year in 2023, so they still need to report one more quarter, I think, and the fourth quarter. Look at that, 37%. The next year in 2024 and 2025, and as well as 2026, for the next 3 years, they're expecting 21 and more. So almost 22% for every single year in terms of growth side of things, which is absolutely huge. Okay, and this is probably why they're still diluting our shares, which is absolutely fine. I mean, once they get to that stage of, I'd rather the company use their diluting our shares instead of basically borrowing money now from the bank with this high interest situation that we're in right now, so which is absolutely fine with me. In terms of revenue side of things, okay, we're looking about 23, 21, 20%, 23% again, 19%, and so on, so it's growing from $8.9 billion in 2023. In 3 years down the line, 2026, we're looking at about $16 billion. It's kind of almost doubling that and more, so which is really nice to see. In terms of profitability, from EBITDA margins to cash per share and so on, is all in the green right now, which is absolutely fine. And as you can see here, rating summary from Seeking Alpha is actually a buy. Wall Street is a strong buy. Quant is actually hold. It's almost closer to a buy as well. Let's have a look at their targets for Wall Street. Let's see if they're saying it's a strong buy, and their price target is $716 per share, and right now it's $729, so it's slightly higher, about 2% basically downside from where we are now. 24 people as basically analysts are saying it's actually a strong buy, and 9 are saying it's a buy, 3 is basically saying a hold right now. Now looking at Morningstar, 3 stars. Okay, I'll show you my own valuations at the end. We're going to do a quick average, but as you can see here, they're saying it's 3 stars, so that means fairly valued, and that is what it says there. And their fair value price is $640 per share. The company has a wide economic moat, and the total return in the last 10 years, okay, is almost at 29%, which is quite nice. So you're making 29% every single year, basically in the last 10 years. Now looking at the expectations, growth side of things, next year, like we've already seen, is about 21%. And then on average, basically every single year going forward, you're making about the earnings are growing about 26%. No, you're not making it, but the earnings are growing 26-27% every single year per annum for the next 5 years. Again, that's just an estimate, so just be mindful of that. And current price, we've already seen $729. $711 per share is where the analysts basically think the price should be. So what I'm going to do now is I'm going to show you one more, and then I'm going to show you my own valuations to tell you exactly what I think. So according to Simply Wall Street as well, it's 720. So again, more or less the same. And the future expectations for this company is about earnings is they're saying about 2.2, 3.6. So they're not really as bullish as the rest of the things that companies that we've seen so far, or the analysts that we've seen so far. Right, before I show you the valuations, if you haven't liked the video already, please do so, because it really helps the channel. Of course, like I said at the beginning, join us on the Discord if you can as well, because it takes a lot of time and effort to put these videos together. So I would really appreciate if you could do that for us. Now looking at the valuations, Morningstar we've seen is 640, we've seen Simply Safe Different is 720, Seeking Alpha 716. My own discounted cash flow model gave me 650. When I basically average out all of that, we came up basically with a price of $681 right now for this company. So that's 7% down, basically downside from where we are right now. If you weren't interested in the company and you said, you know what, I want to buy this company and I want to give myself 10%, okay, so you will basically, your buy price will be $613 per share. It can happen, okay, these things do happen. I'm sure at some point in the last couple of years it's been that sort of a price. So if we look at the 5-year, okay, it was at some point it was about 460 something. I'm sure last time I did an analysis on this company was probably in the 400s. Okay, I think it was in about 2022. So at that time, look at that, 300 something, whatever. But since when is this actually? Yeah, October 19 up until now, it's up a lot. Let me see. Yeah, 30% up just in the last 6 months. That's absolutely ridiculous. But yeah, there you have it. That's the company that I wanted to share with you guys. If you like this type of content, genuinely let me know. If you have, of course, any questions and so any suggestions, whatever, any videos, any stocks that you wanted me to look at as well, let me know as always. And I'm going to continue sharing my journey, and that's the whole reason I started this whole entire portfolio thing, just to share with you guys every single day, every single week, what I'm doing, what I'm buying, what I'm selling, to be transparent as much as I can. And of course, I will make mistakes. I'm not like a guru or anything like that. I'm still learning. I'm still making mistakes, but I would genuinely appreciate everything that you guys do for me, and I would absolutely appreciate if you can join us on the Patreon account, and of course like the videos and subscribe to the channel. Have a wonderful day. Assalamu Alaikum.